Saw a pretty crazy unwind today. I have some reason to think this will continue into the future. So I'm going to talk a little bit about that today and go over what this unwind is, what rotation means, that kind of thing, because we are seeing it front and center. I can't miss it right here in the market. So first of all, right, go over to StatsEdge Trading. You can get access to the free trading courses. This gets you on the free newsletter as well. But if you're already in the courses, you can take the newsletter. But it's a free trading plan course, free intro to trading course. And for StatsEdge Pro, that's running these systems that you're seeing here, there are only 4 slots at the current rate. After that, anyone who is currently in will be grandfathered in as long as they keep a subscription active. And then for new people, well, they're going to have to pay the new rate, which is going to go up 50%. So I think I said on Friday there was 20, and now there's only 4. And I will stop ranting about it fairly soon because someone tells me those are going to get filled pretty quickly. So what am I talking about with rotation? Well, it starts with this tweet that I put out right here, just showing, and of course, like the random bots that are here, but just showing the RSP. So the RSP is the equal weighted S&P 500. It represents the same 500 stocks as the S&P 500. However, they're equally weighted, so it doesn't cap weight the other one. So long story short, it doesn't really matter what Apple or Google or Microsoft or Nvidia is doing. It's what's the average stock in the large cap world. What are they doing? And you can see right here, up roughly 1% as the time I took this picture. And the Qs were down roughly 1% as I took this picture. And you can see it right here. So if we look at the Qs, we can just do an intraday chart. So do a 5-minute chart. They've been selling off pretty much all day. As I'm recording this, it's about noon. Obviously some things may happen a little bit later, but the RSP has been pretty much up all day. A little bit of a pullback recently, but pretty much up all day. And you can see the differences between these two things. And if I do a ratio of them, which is something that us chart nerds love to do, if I do something like RSP divided by SPY, so this is cap weight over equal weight, you can see just a push up all day. These are sometimes better in line charts. So just today, we see a big push up on equal weight versus cap weight. So what does this mean and why is it happening? Well, it essentially means that the large institutions out there, the big guys, are selling large cap tech and they are buying the small guys. So they're moving their money from one place and into another. Now, why do I think this is happening so aggressively that it's being noticed this much? Well, these are charts I actually took. If you didn't see me on Trader TV, these are charts that I took for Trader TV on Monday. Let's just do it here. I was going to just show those charts, but I'll just show new ones. And we'll start with the NQ. And we'll find not the NQ ticker, the NQ futures. We'll do a daily chart there. And then if you just go to TradingView and you can just look for caught data, caught data, you can see most of these will work. I think it's this one that I use predominantly. Yeah, so this chart will come up and then just go through and remove the stuff we don't care about, which right now is everything except the large speculators. Boop, boop, boop. So these large speculators, these are the big guys, institutions, hedge funds, large names. And you can see they've been buying the NASDAQ a little bit late, right? They were short the NASDAQ in this area. They started to buy the NASDAQ a little bit late, so underperforming there. But RTY, which is our small caps, they have been shorting this aggressively. So buying large cap, shorting small cap, or buying tech and shorting value, right? So growth versus value. That's what this trade is. Now, that trade hasn't been working for a while because you can see as they've been shorting, this thing has been ripping. So they've been losing on this trade. And although they have been making money on their large cap tech, it's not going to offset it, right? So you would be better just owning the S&P 500 than investing in some of these funds. So quite often what will happen is the investors of these funds will say, "What's up, bro? I could just buy the S&P 500. You're supposed to be the fancy long short hedge fund manager and you're dramatically underperforming and doing a real long time doing a real bad time trading this. So we want to unwind this position. And we want to unwind this position by doing the opposite, which is selling large cap tech. And you can see that candle here today. So these guys are very long. We're selling that large cap tech and not really buying IWM, but you can see how well IWM's, not IWM, you can see how well IWM is performing. It hasn't even broken yesterday's low. So the reason I think that this could persist for a long time, because if this is an unwind of this trade that's not working, that's not just going to happen overnight. If you're looking at the S&P 500 and how much they've been short the S&P 500, it is as short as they've been since kind of way back here, right? Which hilariously kicked off this bull market. So they've been incredibly short for a very long period of time. So if this is going to unwind and this is going to continue for some time across these different securities, then you could see this persist. So what does this mean for your trading? Well, it means if you own large cap tech, especially if you only own large cap tech, you might be in for a bit of a rough time. If you have some small caps, you have some value names in there, those might be moving higher. Now, quite often, if I'm right and there is an unwind and that unwind happens, they will stretch the other direction a little bit too far. So they stretch one direction too far. If they stretch the other direction a little bit too far, then it might be time to pair off some of that large cap that's doing so well, the more value oriented names, and it may be time to take the other side of that trade as well. So make a wish list for things in large cap world that you want to buy, and then make a list of the small caps that you might want to sell. And then if equilibrium comes back, once this position's undone, then you've essentially bought some things that are low and sold some things that are high and had that revision coming in there. So I hope that makes sense to you. It's very rare to see this, and it stands out and like hits you in the head where it's like, you cannot miss that this unwind is occurring. And if it's going to continue to occur, there's going to be a little bit of alpha that you can extract there, where you could take the other side of these people's trades who are having a really bad time, and hopefully you have a really good time. And then when everything returns to normal, then, business as usual. But I just wanted to explain this a little bit more deeply. Whenever I see something like this, I just turn on the camera and just go. So if you want to make sure you don't miss this, make sure you're signing up for that free email list over at StatsEdgeTrading.com, because every time I put out a video, I send an email about it as well, so you guys can be informed. And until I talk to you guys next time, get away from the screen.